Good morning, everyone. Futures Brizio here. It is 11:30 a.m. Wednesday, January 15th. Hope everybody's having a great week so far. And again, apologize. I've been away a little bit, just kind of getting back into the swing of things here for the new year. And so I just want to drop a video, just do a little review, a little talk on, this is kind of a little bit off the cuff. I didn't really plan this too well, so we'll see how this goes. But we're just going to talk about like just simple trend following, nothing new here. But if you're looking just again to trade with basic, simple trending markets and price action without, cluttering with indicators, then this hopefully should be helpful. And you can use this in any market. I'm going to show you a lot of Forex here, with the half a dozen or so Forex pairs that I trade. And then we'll take a quick look at the futures market. And this can really help you just define, where you should be looking for trades in terms of, the old corny saying about the trend being your friend. And I think it's, as corny as it is true. You don't really want to fight a longer term trend. And that's when people talk about multi-time frame analysis. I'm not a huge fan of going out like to the monthly, then the weekly and the daily and the 4 hour, like and doing, because it's too many to look at. And for most of us, we're not holding trades for extensive periods of time anyways. We're not, if you're trading in Forex, you're trading, spot Forex. You're not going to, most of us are not like investors in the Forex market. We're day traders or short-term swing traders, and that's it. So I'm not necessarily a huge believer in like going out to all these long time frames. It just becomes analysis paralysis, and you end up looking at too many things and kind of confusing yourself. So I'm going to basically just stick with the 4 hour chart as my higher time frame, and then look for entries down on the lower time frame. Say the 15-minute is kind of my sweet spot, but I'll fine tune an entry maybe down to a 5-minute, but really the 10 to 15-minute chart is probably about where it's at. So where it's short enough, but it's still long enough to take out the real fine noise of the really short time frames. Now, there's nothing wrong with looking at a higher time. If you want to go up to a daily, the only reason why I would do that is just to make sure that on the daily chart, for instance, that price, if you're looking to sell, that price isn't about to run into like some major support area on the daily chart. Like if you enter right at the bottom, so it might look good on the 4 hour and the 15-minute, but if you go out to the daily, you're like, oh, you're going to be selling right into a major support area. And it doesn't mean price won't break through there, but, just it's a self-fulfilling prophecy. A lot of, thousands or millions of other traders see that level, and likely there will be a reaction. So if there is some major level on the high time frame, say the daily, then yeah, that's maybe something you want to avoid doing. But that shouldn't require really any more than a couple of seconds on the daily chart just to say, okay, where are we? Are we running into one of those major areas or not? And if you're not, then fine. Then I'm done with the daily. Okay, and then I'm just going down to the 4 hour. So that's kind of what I would recommend. But, of course, not trading advice. Just, do what you want. So let's just look at this. So this is the Euro Canadian. You can see I'm in a trade right now, and I'll show you why I'm in it. So if we go out to the 4 hour, you can see I have this yellow trend line drawing. Well, clearly we're in a downtrend, right? So from this last swing, that's what I like to just take my my trend line from the last swing. And if it's not obvious, then just skip it. And I think I do have at least one of these 6 or 7 pairs where it's not obvious to me. And so I'm not going to try to, it should just jump out to you. So basically this is a trend line following system, although you don't technically need the trend line to look at this and say it's in a downtrend. But if it helps you visualize, which I do like, I'll just throw one on there and just, connect the highs in this case and look. And clearly we had a price come right back up to the trend line. Okay. And so this one is almost like textbook because we're in a downtrend. Price came right up to this trend line. okay, and then sold off from here, and you can see, it's pretty strong. So what's a good target? Well, a good target at minimum would be back down to this previous swing low. If you want, you also could just take another trend line and draw it here. And assuming that the market's going to make another new low, it probably will respect this lower trend line. And you could wait for price whenever it gets down here to kind of bounce. And as soon as it taps this lower trend line, that would be a good place to exit. But at the very minimum conservative, I would probably look to, to exit, somewhere like right in this area right here, because you can see that, there was some buying at this level, but it's the trend line that, they were reacting off of right here. But we had 1, 2, 3 attempts to go lower, and then the price reacted. So again, a conservative target would be here. If you wanted to let it run past there, then wherever it eventually comes down and tags this lower trend line would be a good place to target too. So I don't have a TP set right now, but I probably will look to do that later on. Okay, so so there's one right there, and you can see as long as this trend line is respected, then I'm willing to continue to look for shorts. So basically what I would say is that now that we've made this recent touch on the trend line, and as long as price stays below this area right here, below where I have this arrow, then I'm going to continue to look for short positions on pullbacks. So, but remember, it may not always come back to the trend line. So like right here, it didn't quite make it back. But if we go to the 15-minute, we look at that area. You have to scroll back a little bit here. That's this right here. Okay, it didn't quite make it back to the trend line, but clearly we had a structure. Well, this is a huge candle. This must have been a news candle. I don't know when what this was. I'd have to go back and look. But a candle this big is definitely a news candle. Let's see what time of day this was. Yeah, that's 8:30 New York time. So this is definitely a news candle from. This might have been NFP from last Friday. No, it wouldn't be NFP. This is Euro Canadian. It was probably some Canadian employment news. A lot of times that does come out on the same day as the U.S. employment news. So this would be a good area. Now, obviously, if you weren't already in this short, then you kind of would have chased a little bit of a falling knife. But still, it did pull back a little bit and then kept going down. So even if you got in somewhere on this big candle, even down here, yeah, you would have gone into a little drawdown. But then price did eventually come down. So this is tough. I mean, it's hard to do this, unless you're already in the trade and before the news comes out, you just jump in and, take the short and just take your chances that the news will be such that it goes down, which it did here. Okay. So, but again, just going back here, what the trend line allows you to do is just to visualize, what you should be looking for. And again, I like the 4-hour chart. And then, you can just go to your lower time frame and just look for those market structure shifts back down in the direction. Now, if it comes back up again and tags the trend line, that's super ideal, A+. But like I said, in this case, sometimes it doesn't, and that's okay too. So then in that case, you want to just, again, use the lower time frame, look for a market structure break. All right. So that's Euro CAD. Euro Kiwi. So this is actually, this is a good example. This is a very late entry. I probably shouldn't have taken this. But if again we go to the 4-hour, again we had this. We have this clearly in a downtrend off this recent swing. Okay, so we're going down again. Is right now I would say, this is kind of the line in the sand. I wouldn't look for long positions unless this area, which was the last trend line tap here, was broken. Meantime, this is all short, looking for shorts. We did have price come up here. All right. And then, so now we're down on the 15. We had price rally through. You can see it was making higher highs, higher lows, but we're not looking for longs. And then at this point right here is really where we broke structure. So an entry anywhere in here would have been fine. And you can see I'm very late on this, and price is now pulling back. So ultimately, we'll see how this one goes. But this is not an ideal setup to take. but I have a small position on this. So, but it's still important to show you what it looks like though. All right, so let's go to Aussie yen again in a short on this one. So again, here we have our recent swing. We can see we're in a downtrend. This trend line is now connected, this major high with this major high. But you can see in here we had 1, 2, 3 entry points back here where it didn't make it to the trend line, but still we're trending down. And any of these entries back here, if we go to the 15 now, okay, so anywhere in here, here, all would have been good places to enter. Okay, we had pullbacks. We wait for a change in structure, and ideally what you want to do is enter back here, and then you can just hold all through this. But so a conservative approach is to wait until the price comes all the way back to the trend line and then look for your entry then. A more aggressive approach, if you want to be in the market a little bit more and you're willing to take a little bit more risk, then you can just take these other swings where price comes back up. These are like the mid-trend swings. These are major swings at the trend line. These are kind of more minor swings within that move down. So you certainly can take these, but like I said, if you want a little bit more of a set and forget type thing, then basically you just wait for price to come to the trend line or very close to it, and then you look for your entries on the shorter time frame then. Okay, and you can see I'm in a short off this. Again, the ideal entry on this one was up here, but on a 15-minute chart we really didn't get a structure break until this low right here, where it came down and took out this swing where price came down, tried to come back, and then we took out this low right here, and now we're coming down. So obviously we do have some support sitting very clearly right here, but I do think that price will break through here. This was like a retail area right here where price is chopping around. It breaks higher. It sucks in traders to go long on the break above these highs, the people that are not necessarily following the trend, but just trading on the shorter time frame. They see all these equal highs here. They wait for a breakout. They push this price up here, force people in above these highs. Right in here, it's like I said, it's like a little retail trap area right here. So they push up this, these two candles above, and then they slam it back down. So I'm still, figuring that this will, come down and break through this support and head lower. Just based on that, you can see it's just chopping around now. But it's not exactly a great time of day either. But I will hold this trade, and I'll probably just, because you're looking for these on a higher time frame, a lot of these do turn into swing trades. Okay, so that's the Aussie yen. On to dollar Swiss. You can see I'm in a long here. So again, why are we in a long? Well, this one is really textbook. And we did have inflation news today, CPI news, and that's the reaction off this. So here's our uptrend. Very clear respecting of the trend line. 1 touch, 2, 3. Then we had this one right here, and then boom, we had the news come out today, and price reacted right off the trend line's been heading higher, and so and you can see what's happening right now. You can just really visualize this. Is that this is reacting off of this trend line right here, this sub trend line on the 15-minute chart, where prices come up and reacted off of here. But again, you have to have a little bit of surety in your analysis to say, look, the higher trend is bullish. We did have a strong reaction here that even though on the 15 we've got a reaction off of a sub trend line here, that eventually this will turn and go higher. Now you could just scalp this and just exit right here. That's perfectly fine. But if you have conviction in your analysis and you're taking your cues off the higher time frame to understand that even though this may retrace now, the chances are this is going to go higher just based on what you see on the higher time frame. Okay, and again, a good target on this is minimum back up to these previous highs. But again, you could take a trend line, extend it across the highs, and say, okay, well, the next the next time price comes up and tags this trend line, then, that'll be my TP. I don't know exactly where that will be, but that will be my take profit. Okay. But more conservatively, could at least be back to around these old highs right here. Okay. So that's dollar Swiss. Okay. Dollar Canadian in a downtrend. However, this is not a great one because this price action is more sideways. You can see all of this. So even though I do have this trend line pointing down here, this is not a great one. So this is one where I just skipped it. It's not clearly not in a trend like we had up here. Okay, so I'm not really interested in this. So I'm not trading that. Aussie Swiss, here's the 4-hour. Okay, unfortunately I missed this one, but this actually, we're in an uptrend. We had a tag, so this was the last good entry. But we did have another entry right here where price broke from the trend line, came up, retested, and then made another new high. But I'm not interested this far away, so I will wait to see if price kind of works its way back down towards the trend line, and then look for a potential another long entry further down back around here or at the trend line. But so this is an uptrend, but there's no trade entry. And then Swiss yen, I think, yeah, it's the same way. So we've got the downtrend. We did have this minor swing right here, which turned out to be a really nice move right here. Never made it back to the trend line. You can see all these areas here on the 15-minute chart because we haven't had a tag of the trend line since back here. And then, we had this big push down, and then we rallied, and then have come back down. But again, there's no entry now because this has already been missed. So what I would wait for here is to have price, pull back, whether it comes back to the trend line or whether it's just some retracement level of this move, but, some kind of pullback here and then a move back down. And again, unless and until the last big hit on the trend line is taken out, which is right over here, then I'm not looking for, any longs in this. Now this is the last swing. Again, I consider the swings on the 4-hour that tag the trend line as kind of the major areas of structure. So if price comes up, breaks through this trend line, comes up here, takes out this high, then we're probably going to move higher. That gives the market plenty of action, all this area in between here to prove that it wants to go higher. I'm not going to rush it. I'd wait for price to break here. Then it'll probably retrace a little bit and then go. But until that happens, I'm only looking for shorts here. Okay. So simple trend following system using the 4-hour and for your analysis. Again, look for a clear trend. If it's not there, if the price action is sideways, if you can't just look at it in like 3 seconds and say uptrend or downtrend, then forget it. Move on to something else. Because if you sit there and you try to overanalyze it, you're gonna find something. Your brain's gonna find something that's not there. There's plenty of other markets, pairs to look at. Just move on to something else. Okay. So that's my advice on that. All right. So that's it for Forex. Let's just jump over to our futures, and you can kind of do the same thing here. Here's natural gas. This is March natural gas. You can see multiple tags on the trend line here on the 4-hour. The last one was right here. I would just be a little bit more careful. Futures, especially some of these futures markets can be very volatile, and energy markets definitely can be very volatile. So you will see these really big retracements. You can see price came all the way back down to the trend line. And on a shorter time frame, this looks really ugly, right? This, we had this gap in price and then this weird looking pattern, right here. We had this gap in price, and then price just trended back to the trend line and went up again. So I do like to try to be patient on these, especially on these super volatile ones, and just let the trend line play out. And again, this was the last swing. So unless and until price comes down and takes out this swing, if this is the last swing, then, at that point I'd be looking for short. Now, if price comes back to the trend line again, let's say comes at some future point, comes back down here, and then goes up again, okay, well then my swing would then be, this area right here. That would be kind of my line in the sand for for it. But right now that hasn't happened yet, so we're just going to keep this right here. Okay. So there's no option. I did take a trade in natural gas already. I'm already out of it. I got out here. Price pulled back. It's trying to go higher, but this time of day again, it's probably not great. So, but I'm out of that anyways. Same thing in crude oil. I did take a trade in this, which I'm now out of, but clearly we're in an uptrend, right? Now this one's a little tougher to draw the trend line just because of the angle of the move. This is one issue with drawing trend lines. Like, it's hard to draw this because, the down move started, the up move started back here, but I can't draw this trend line and capture like all of these swings. So what you either have to do is sometimes you can adjust the time frame and get a different angle just based on how your platform draws it. But if you can't, then, I think that's okay. What I do in that case is I'll just use these because clearly it's in an uptrend, right? There's no doubt about that. So, you can, let's go back to the 4-hour. You can just connect these most recent ones, right? It's in an uptrend. So yeah, it would be nice if you can capture all this down here, but you really can't. And so again, where's your swing? It's right here. And so, until if and when this is taken out, which also breaches the trend line, then I'm still looking for longs. Obviously not today, but you can follow the same process. Okay. So that's crude oil. Again, nothing happening there at the moment that you can enter, at least not on this time frame. Now, if you want to scalp things down on like a 5-minute, then obviously, you could play these pullbacks like we're in one right now. On the 5-minute, you've got, this swing right here. And price, you can see, is trying to, come down and tap into that. And this may turn and go back up. So, maybe if it looks like it's going higher, you jump back in here on the 5-minute and go long again. I'm not saying you should do that, but that's if you want to play these moves up. Clearly, again, we're looking for longs, and this could be an area. If this swing holds, then which it looks like it's trying to right now, then you could potentially enter a long right there. Okay, if you want to do that, but if you want to stick to the higher time frames, you're not going to get as many trades. You will definitely have to be patient, but it does allow you to kind of just only have to look at the charts a couple of times a day. And I think it also allows you to look at more markets too, because if you're starting on the high time frames, the 4-hour chart only prints 6 candles a day, and so there's either going to be a setup forming and there isn't. If you came to the charts already and you see the price up here like it is now, well, there's no trade there right now so you just move on. If you come to your charts and you see price on the 4-hour pulled back near the trend line, that will have my attention. Okay. So, but as this speaks, right now there's nothing. But again, if you wanted to try to scalp it, look for longs on a short time frame, you certainly could try, like right here. So anyways, okay, so we'll move on to this is the DAX. This is the only index I trade right now. I'm not trading S&P or NASDAQ or Dow or Russell 2000 or anything. So I do kind of like the DAX, even though it's the German stock market. It does tend to move pretty well during the North American session. You would think this really would only move like during the London session, like early morning, and it does move during that time. But it does actually make some moves during the North American session too. So you can see, again, clearly in an uptrend from this recent swing. Again, this one's a little bit tough to draw a trend line on because we've got this. But maybe not, so because we've got, touches here, then this touch and this up move. So now, ideally, again, what we'd like to see is price come eventually back to the trend line at some point here and then continue to move up if you're going to use this. So as price approaches the trend line, again, may not get right to it, but if it comes very close, then that will get my attention and I'll drop to a 4-hour chart and wait. And, these retracements can take anywhere. I mean, if you just look at how many candles it takes, on average, it probably takes about 2 to 3 trading sessions. If you just count the number of 4-hour candles on this pullback, on this one's longer. You can probably figure you're waiting at a minimum of a couple of days for a pullback to finish. So that gives you an idea of how long you're going to have to wait from, you know, a new high and a retracement, assuming you're looking at a trend line. That'll give you an idea how long you're going to have to wait. And so that's fine. You just look at it once or twice a day. Okay, there's nothing happening right now. I'm sticking to the 4-hour chart. Fine. And again, you know, in this like really big hockey stick move up here, you know, again, you could go to a shorter time frame and look for entries here. Like there was one right here. This was obviously beautiful. And I think this was the CPI news this morning in the U.S., but it did move the DAX too. And now things have just been chopping. And, you know, honestly, I wouldn't look to enter this market now. This is the German index, and, you know, it's already like after trading hours in Germany. So this probably won't do anything now. So. All right, but that's that. And then this is copper, which I'm in right now, a little bit late entry. And you can see I'm just sitting about break even on this long. But again, clear uptrend here on the 4-hour. This was the last tag right here at this point. Right, this was the last tag on the trend line right here. Okay, so 15-minute chart, you know. This was a little bit weird, you know, because we had this huge candle broke to a new high and then ended up closing lower. But then, you know, I think this was just a liquidity run. Ran down here, tapped liquidity, probably took out some stop losses. All right, sucked in some traders here to go long. And then, you know, they probably had their stop sitting. It was just one giant whipsaw candle. But you can see it's going higher again. So I'm going to hold this one. I do have a TP up here at this swing. You can see up here. It's, you know, I think it's a pretty conservative area. There will definitely be a reaction from this area. Not to say it won't go higher. It may very well go up to this high before it does anything, but I'll be willing to be a little conservative on that and just take it from that area. It's still about eyeballing at least a 3-to-1 risk to reward ratio. All right. And so that's that, yeah. So that's copper. That's the only active trade I have open right now in futures. All right. So again, guys, that's it. It's simple trend following, 4-hour time frame. These are good for swing trades, but you can certainly day trade with this too. And again, you can go to a lower time frame. Just keep that 4-hour trend in mind. But again, the lower you go, it could be more noise. You're going to, you know, see pullbacks and potentially jump into something when it's not a pullback. It's going to be a bigger corrective move, you know, against the trend, and you're going to get caught, you know, trying to jump in too early. That's so, you know, whereas if you just let these 4-hour candles play out and just wait for your opportunities back around the trend line, that's always going to be your, you know, your safest bet. But again, you're not going to get as many trades, and you will have to be patient. So again, you know, from a standpoint of, you know, this market, you know, this is kind of, you know, the last recent tag on the trend line. So as long as price remains, you know, above like this area here, I'm basically, you know, continue to look for long positions. Although on here, this is also, even though it didn't make it to the trend line, this is a pretty big, important area right here too. But anyway, so that's it, guys. I'm going to leave it there. Again, very simple, mechanical. If you look at a chart, again, if it's sideways action, you can't just immediately within like 3 seconds look at a chart and say, is it an uptrend or is it a downtrend? Then move on. It's not worth sitting there trying to, well, you know, it's kind of up, but it's a little sideways, and well, I can make a case for it one way or another. Don't do that. Okay, there's plenty of other things you can trade. Just move on to something else. Right? Simple. All right, and you know, I just think that's my opinion. So everything here is my opinion. All right, so I'm going to leave it there, guys. As always, make sure you smash that like button, subscribe to the channel. I should have said that at the beginning. And questions, comments, always happy to answer down below. And hope that makes sense. And we'll be back with some more updates. But I wanted to just, you know, do something that was very simple. I know the last several videos I was talking about retail sentiment trading. You can go back and watch those. Very, very valid. But if it's too much to, you know, because basically all of this is trend following, right? That's basically what you're doing here. This is trend following. But the extra reinforcement here is that you're trading against retail traders. So this, I just happen to bring up Aussie Swiss, right? So Aussie Swiss is in a downtrend. So you're trend following this. But in addition to that, the retail traders are 82% long, which gives you more confidence to say I should only be looking for shorts, not only because the trend is down, but because retail traders are way against the trend. In this case, only 18% are short, 82% are long as of yesterday. Okay, so that's the benefit of using this. So this could be an extra confirmation. You know, even if you want to use what I just showed you and then look at this and say, okay, you know, am I in line with the market? Am I going contrarian to retail market sentiment? And if you are, then to me that's a bonus. So because again, most of the time they're wrong. Not always, you know, maybe 10 to 30% of the time they're gonna line up, and that's fine too. But that's the statistic. So you can certainly can still use this, perfectly valid. Use it as a confluence in what I just showed you. So, all right. So again, guys, that's it. I'm going to leave it there. Questions, comments, smash the like button. Do all that down below. Subscribe to the channel. And we'll talk to everybody really soon. All right. I appreciate it. And catch you on the next one. All right, guys. Thanks very much. Talk to you later.